What is up, guys? Logan here, excited to get into another video with you guys. So I want to show you guys how I use credit spreads and trading options to create what I like to call infinite income. And this is where I take the profits that I make trading options and I turn those into shares, specifically dividend shares, and I'll go more into depth on why I like dividend stocks for capital preservation, so you guys can kind of see how my brain works when it comes to trading and also making money and also thinking about the future and compound interest and all of that. So let's definitely hop right into this video. Before we do that, please leave a like, subscribe, and also hit that bell notification down below so you get notified when I drop a video. Also, we're pushing 2,500 subscribers and I cannot thank you guys enough for the support. It means the world to me, man. I'm lucky enough to have an amazing audience, lucky enough to be born in America, and lucky enough to have all these opportunities. So I just wanted to say thank you guys for that, as it really means a ton. Make sure to check the Discords in the description below. There's also a couple other links down there too, where you can check out my CBD website and my music and stuff like that. So make sure you check those out. But let's hop right into this video and I'll talk about this credit spread that we're looking at. So on this first credit spread down here, these are SPY 356 350 puts. So we sold the 356 put, we bought the 350 put. SPY is currently trading at 368.96. I bought 10 of these contracts. As you can see down here, this is kind of the current spread right now, but we're up $200 with $20 more to be made. So as long as SPY stays above 356 by close and about an hour and a half into after hours, as long as SPY stays above 356, I'll get credited my full amount of 220. So this is one of my plays. So this one I put up 6,000 in collateral because it's a $6 spread, right? 350 to 356 is $6. And since it's a $6 spread and I have 10 contracts, that's $6,000 in collateral needed for this play to make $220 in a week, which I think is totally worth it in my opinion. Especially when going into the trade, I had a 90% probability that this would be out of the money by expiration, because every day theta decay will chunk the contracts down, and as long as SPY doesn't drop below that mark or come close, I feel pretty safe and comfortable in my position. So this is the first spread that we're looking at here, and I really like trading SPY, I really do. And it's crazy because SPY's kind of been sitting in the same range the last 2 weeks, as you guys have noticed. I mean, right now we are where we were 2 weeks ago, like 2 Fridays ago, so my portfolio's been pretty much sideways the last 2 weeks when it comes to like my long-term shares kind of hopping up and down. So let's hop into the other spread and then we'll talk about dividend investing with the profits. So this right here is the DIA spread, so this is the Dow Jones Industrial Fund. This is the 293, 288 puts, and this is personally my favorite stock to play credit spreads on because of the low amount of movement, because a lot of the stocks that are heavily weighted in this fund, like Boeing and Home Depot, aren't as volatile as a lot of the other stocks in sectors like SPY or QQQ, right, with tech. If tech's down really big in a day, you know, like 3%, that is not very much movement between all of the stocks that are in that fund, if that makes sense, right? Because Apple typically, and tech stocks like that, like all these tech stocks can move a lot, where the Dow Jones Industrial stocks, right, the Dow 30, they are heavily weighted between a couple stocks, but the ones that they're weighted in really don't move as much. So I feel more comfortable in DIA more than any other position. And with the DIA spread right now, we have $16 left to be made. We have made a total of 185, so this would be 201 if I let this fully expire. I have 8 of these. It was a $5 spread, right? The 293 to 288. So this was 4,000 in collateral. So this week I went in with 10,000 in collateral to make $421, which is 4.21%, which is phenomenal in a week, right? When index funds do 8% a year on average. Also, you guys got to remember that I swung a spread for $24 over the weekend, where I put 800 in collateral to make 24, which is roughly 3%. So with that play, we're also going to add that into the profits, so that's a total of $445 off the spreads this week, and with my goal of $500 a week off the market, that really helped me get close to achieving my goal for the week just off the spreads, to where I only had to trade a couple of times this week to hit my 500, which we did with Home Depot. This will expire at the full amount as long as DIA stays above 293, and if we look at the weekly chart on DIA, let me search it up real quick. Considering even in the past month that DIA has hovered in this range, and the last time they dipped to 293 or below was on November 20th. So I feel pretty good about it as of right now, And even looking back at the last 3 months, the VIX is lower today. So everything feels good. Yes, we're down 0.5%, but that's nothing too crazy because this is an ETF, right? It's up 6% in the past year. Of course, we had the big drop back in March. But as of now, it's been pretty laid back for the last couple of months, which is really cool to see, I think. So let's hop into rolling some of these profits into dividend stocks. I'll tell you guys the ones that I like a lot, and then also we'll roll some money in because, you know, I feel pretty confident about this position as of now. So we can prematurely, before this expires, just roll some money in out of my buying power. So if we take a look at this stock right here, this is Simon Property Group. This is one of my favorite dividend stocks. So with SPG, and I want to scoop some for you guys, so I'll just throw like 10 bucks at it because it's at a low for the day right now. And it could keep falling, it could also rise, but at the same time, I'm looking long term here. So let me just go to trade, I'll go to buy, we'll just throw 10 bucks at it. And I buy fractional shares, so it'll buy 0.1 shares for me, which isn't a ton, but it also is some of the profits out of these credit spreads where I just let them expire and then I get awarded the money, or I could also close it early. So these are all profits that I'm buying shares with. So if the market's ever to pull back and maybe SPG does come down again, we'll have to see, but I'm not too worried because these are a long-term hold, right? We're looking at this recovering to 150 over time and also owning these shares and continuing to add more and more to them. So now my market value is currently 192.92 on them. I really like SPG. They have a really solid dividend payment system. It's a really good percentage now because the shares are cheaper and my average cost is now $64.53. So that's one thing that I like to do is buy dividend shares with my profits, so then I can create this infinite money loop, as I like to call it, because if your profits are buying these shares and the market pulls back, you don't get emotional because it's not money that you had to work really hard for, right? So if you have these profits owning shares and at the same time you didn't have to work for this money, so it was all profits from trading, now it pays you on a yearly basis a percentage. And SPG says down here it's 7.7%. Now that might be incorrect because Robinhood can be incorrect sometimes, but it's still a really nice stock and I really like this long-term potential for them. We'll also look at the other stock that I like to buy with my credit spread profit. Now here's the other stock I really like. This is ABR, Arbor Realty Trust. My average cost is $5.38. So I bought 100 shares back in April. Currently have 111 shares from dividend reinvestment and also from buying more shares with options profits. As you guys can see, I'm up 170%. This is a stock I wish I put more into back in the day, but it is what it is. I still am happy with my position. They pay really good dividends. As you can see, I'll even scoop quick payments, right? Like if I make a quick, whatever, off a couple spreads, or sometimes I try to wait and get a better price throughout the day, but just being consistent with it, right? But here's the dividend that I got paid last time for having 106 shares. I got $34.03, which reinvested 2.5 shares for me. So I'm just really excited about this. And this is how I want to continue to trade and move these profits until I get to the point, right, to where ABR is paying me $100 or $150 every 3 months or $200 or $300, right? And if you look at where your portfolio is going to be in 2 to 3 to 5 years in the long-term run, and you continue to have your shares reinvest themselves and buy you more income, as I like to call it too, you will have so much passive income coming in, you can start to pay bills with it. And I think that's really impressive. And the other reason why I like dividend shares so much is for capital preservation. Dividend shares through pullbacks, market crashes, and all of that stay pretty consistent. Now dividends can be cut, as you guys know, but as far as share prices and movement, if we look at growth stocks like Tesla or Fastly and how much those guys can fall, let's hop over to Fastly real quick so I can show you guys that. So yes, I could, because I'm young, take advantage of growth stocks, right? Because I can be more risky, but I already put my money at risk playing options. So then I want to take them to the next step down, which is dividend stocks, capital preservation. Because if we look at Fastly in the last 3 months, yeah, they ran up in September to 128 and their stock fell all the way down to 63. Now, if I was somebody who bought up here and saw that my shares were down to 63, down 50% on my investment in 2 weeks, that could freak a lot of people out. So that's the one reason why I like to go with the dividend route. It's because you won't have these crazy movements over the lifetime of the stock. And even though it has grown a crazy amount in this past year, I didn't really hear about Fastly even until around June 12th when they're around 50 a share. That's one thing too. I love this for a growth stock. I like Fastly a lot. There's a lot of great growth stocks, but for me personally, if I can roll the money that I put at risk in 1 week into something that will pay me over my life, I think looking at the long-term value in that is something that's really cool and something that can really pay off down the long road. And yes, I'm a big fan of consistent income versus just growing the portfolio value. As you guys know, I'm about steady growth with goals and consistent income because that's the thing that allows you freedom, right? Is having steady cash flow. It's like real estate, stuff like that. My sister also trades credit spreads too. She puts up about $1,000 a week to make $50, rolls that into realty income so that she can get paid monthly dividends. So I think that's something cool too. But I really appreciate you guys for making it this far in the video, as it really means a lot to me. It helps the channel. I can't believe that we're almost at 2,500 subscribers. This past year has been a wild ride, as you guys know. I mean, between everything going on in the world. So I'm just really excited that you guys are still here, watching videos, learning, getting better at trading, and there's a lot of cool stuff that comes along with it. So I just want to say thank you guys for that. Really appreciate it. Today's Friday. I'm really curious to see how the weekend goes. And also next week, the market's going to be closed on Friday and closes early on Thursday. So take care of the family. Have a great time, and I'll see you guys in the next video.